Hi, welcome back to Joe Blogs. In today's episode, I want to talk about cryptocurrency. The vast majority of cryptocurrency transactions take place on cryptocurrency exchanges, and the world of crypto exchanges was blown apart at the end of 2022 when Sam Bankman-Fried, the founder of the world's second largest cryptocurrency exchange at that time, FTX, was arrested on fraud charges, and the FTX business, which had previously been valued at $32 billion, became worthless overnight. Sam Bankman-Fried's associates, including his former girlfriend, Caroline Ellison, have all pleaded guilty to the charges against them, and we await the court case for Sam Bankman-Fried later in 2023. Now, the failure of FTX highlighted the issue that the crypto markets remain unregulated on the whole. However, the US Securities and Exchange Commission, one of the regulatory bodies in the USA, are now trying to do something about this, and this week they've issued lawsuits against Binance and Coinbase, the two largest cryptocurrency exchanges in the world. However, not surprisingly, both Binance and Coinbase have denied any wrongdoing and are fighting against these lawsuits. So in today's video, I'll have a look at what the SEC does and why it's trying to exert its authority over the crypto markets. We'll have a look at the specific charges that have been raised against Binance and Coinbase. We'll have a look at the history of both Binance and Coinbase. We'll then go on to check out what's happening with everybody's favourite cryptocurrency, Bitcoin. And then finally today, I'll wrap up with my summary. So what I think is likely to happen over the course of the next 3 to 6 months with these cases, and what the implications are for the wider crypto markets. Binance was established in 2017 by its founder, Changpeng Zhao, originally in China, but moved its jurisdiction out of China into Japan before the cryptocurrency ban was introduced in China late in 2017. Now, as one of the first movers in the market, Binance quickly established itself as a cryptocurrency exchange, and its fundraising and financing have been very secretive historically. There's no real details on where any of the capital came from. There's no formal investors. There are no financing rounds. You can't find anything on Crunchbase to tell you what the valuation of the business is. So it's quite secretive. And in terms of its official location, Binance is also not very transparent. It operates in a number of different jurisdictions. It's registered in 14 different locations and doesn't have an official head office. The official statistics say that Binance has 120 million registered users globally and 147 employees. The original basis of the business model is exactly the same as the FTX model. It's essentially a cryptocurrency exchange. So customers go on, set up an account, and you can buy and sell any type of cryptocurrency that you're looking to do a deal in. And the way Binance earns money is by charging fees on all of the trades that are made. And it's reported that Binance takes 0.1% commission on all of those trades, which, when you look at the volume of trades, could equate to a very large amount of money. This chart shows the estimated volume of transactions executed by Binance over the course of the first 11 months of 2022. The red section of this chart relates to spot deals. So spot deals are basically deals that are done there and then. If you want to go in and buy Bitcoin right now, you pay the price that's being quoted, you do the deal, and that's the spot deal done. The blue section relates to derivatives trading, and that's where you're doing things either at a forward date or some other form of hedging type deal. So not a straightforward purchase and sale at today's price. You may be doing it at next month's price, or you may be doing some form of lock-in of value to protect you if prices fall. Some form of complicated transaction. So what you can see from this chart is that firstly, the majority of trades that are done on Binance are derivatives trades. So this is a more sophisticated form of trading than simply buying and selling at whatever the price is right now. And the second thing to note is the sheer volume of trades. On average, around $2 trillion worth of trading is done every single month. And when you think that Binance is taking a 0.1% commission on all of that trading, that equates to a serious amount of revenue that Binance is taking in. In addition to its trading business, Binance is also involved in investing into other cryptocurrency businesses, which is a feature that was similar to the FTX business model. Since 2018, it's reported that Binance has invested over $1.9 billion into more than 150 different cryptocurrency businesses.
The US Securities and Exchange Commission filed more than a dozen charges against the world's largest crypto exchange, Binance, and its CEO on Monday. The watchdog accuses the company and its head, Changpeng Zhao, of misleading investors, operating what it calls an extensive web of deception. The SEC says Zhao and the exchange commingled billions of dollars worth of customers' assets, or mixed with corporate funds, a breach of US law, and that those assets were secretly controlled by Zhao. It also alleges Binance operated unlawfully as an unregistered exchange, and that Zhang designed and implemented a plan to, quote, surreptitiously evade US laws. Binance says it intends to defend its platform vigorously. It said all user assets on its platforms are safe and secure, and since it is not a US exchange, the SEC's power is limited in reach. Binance grew dramatically after the collapse of Sam Bankman-Fried's FTX last November, but the SEC complaint is the latest in a series of legal challenges to the company. In March, another regulator, the CFTC, alleged Binance helped commercially valuable US-based VIP customers evade compliance control, even though the company's global business policy said it restricted US customers from trading on its platform since 2019. Market players said the latest allegations from the SEC could hobble the company, with the lawsuit likely to reverberate through the crypto industry.
So US regulators are now suing Binance and its chief executive Changpeng Zhao for allegedly operating a web of deception. The SEC have formally filed 13 charges against the company, alleging that it inflated its trading volumes, diverted customer funds, failed to restrict US customers for its platform, and misled investors about its market surveillance controls. The SEC is also claiming that the company secretly controlled customer assets and allowed them to co-mingle, which was one of the issues that led to the failure of Sam Bankman-Fried's FTX. The SEC claims that in the 3 years up to June 2022, a trading firm owned and controlled by Binance's chief executive engaged in so-called wash trading that artificially inflated the trading volume of crypto asset securities on Binance's US platform. It also alleges that the business spent $11 million from one of its accounts on a yacht. Gary Gensler, the chair of SEC, said in a statement, "We allege that Zhao and Binance entities engaged in an extensive web of deception, conflicts of interest, lack of disclosure, and calculated evasion of the law." And in direct response to the SEC's actions, customers of Binance pulled around $790 million out of Binance and its US affiliate. In response to these allegations, Binance said, "We intend to defend our platform vigorously," adding that because Binance is not a US exchange, the SEC's actions are limited in reach. All user assets on Binance and Binance-affiliated platforms, including Binance US, are safe and secure. The company went on to state that it had actively cooperated with the SEC from the start and respectfully disagreed with the SEC's allegations. Binance had been trying to find a reasonable resolution with the SEC, but the agency at the 11th hour issued new requests and went to court. Binance said the SEC's actions appeared to be an effort to claim jurisdictional ground from other regulators. Simply put, today's filing is unjustified by the facts, by the law, or by the Commission's own precedent. The relief sought by the Commissioner would harm the very investigators the SEC is charged with protecting. It would also stifle innovation and punish our company and industry rather than working to allow American businesses to thrive. We continue to call on Congress to step in and pass bipartisan legislation that creates a workable regulatory regime for digital assets and reins in the bureaucratic overreach of which our industry is the victim. Until then, our country's role as a leader and innovator will continue to be undermined. The SEC complaint is the latest in a series of legal headaches for Binance, which was also sued by the US Commodities Futures Trading Commission in March for operating what the regulator alleged were an illegal exchange and a sham compliance program. Zhao called those incomplete recitation of facts. Binance is also under investigation by the Justice Department for suspected money laundering and sanctions violations. Coinbase was founded in the summer of 2012 by Brian Armstrong, a former Airbnb engineer, and Fred Ursum, a former Goldman Sachs trader. The company took its name from Coinbase transactions, which are special transactions that introduce cryptocurrency into circulation in proof-of-work cryptocurrencies. In May 2013, the company received a $5 million investment from Union Square Ventures, and later that year received an additional $25 million from Union Square, Andreessen Horowitz, and Ribbit Capital. By 2014, the crypto exchange had 1 million registered users, and at the start of 2015, the company received a further $75 million investment led by Draper Fisher Jorvetson, the New York Stock Exchange, and several banks. Over the next 6 years, the company continued to expand both organically as the popularity of cryptocurrency increased and through acquisitions. And in April 2021, Coinbase listed its shares on Nasdaq in the USA. The initial share price for the IPO was $250, which valued the company at $47 billion. However, by the end of the first day's trading, the shares had risen in value to more than $328. Coinbase offers products for both retail and institutional cryptocurrency investors, as well as other related cryptocurrency products. Coinbase operates a remote-first company and has no physical headquarters. At the height of the cryptocurrency boom at the end of 2021, Coinbase's market capitalization rose above $100 billion. However, over the course of the last 18 months, the shares have reduced in value significantly, and the market capitalization today is sitting at around $12 billion. Coinbase is now the largest cryptocurrency exchange in the USA and has over 100 million registered users who transact in billions of dollars worth of trading volumes on a daily basis.
Another crypto giant is in trouble with US regulators. This time, it's Coinbase. On Tuesday, the US Securities and Exchange Commission sued the country's largest crypto asset trading platform. The SEC accused the company of illegally operating without having first registered with the regulator. It said Coinbase operated as an unregistered broker by handling cryptocurrency transactions since at least 2019. It's alleged to have evaded the disclosure requirements meant to protect investors. The SEC accused the firm of operating as an unregistered broker through its services Coinbase Prime and Coinbase Wallet. SEC Chair Gary Gensler tweeted that the company's alleged failures deprived investors of key protections from fraud and other serious matters.
The Securities and Exchange Commission is now suing Coinbase, stating that it acted as a broker, exchange and clearing agency for investments that are subject to SEC rules without properly registering. The regulator stated that the lack of registration had allowed Coinbase to escape oversight, including guards against conflicts of interest. Alongside the SEC charges, financial regulators from 10 states, including California and Alabama, also filed legal actions alleging that Coinbase was operating as an unregistered securities dealer. Gerber Grewal, director of the SEC's Division of Enforcement, said, "As alleged in our complaint, Coinbase was fully aware of the applicability of the federal securities laws to its business activities, but deliberately refused to follow them. You simply can't ignore the rules because you don't like them or because you'd prefer different ones. The consequences for the investing public are far too great." In direct response, Coinbase claimed that the rules were not clear. Paul Grewal, Coinbase's chief legal officer, said the solution is legislation that allows fair rules for the road to be developed transparently and applied equally, not litigation. In the meantime, we'll continue to operate our business as usual. In March, Coinbase had warned its investors that the SEC could take legal action against the firm. At the time, it called the development disappointing and said it had repeatedly tried to work with authorities to register, but that there was no clear path for crypto firms to do so. It had also threatened to relocate out of the USA to London or elsewhere. Coinbase suffered around $1.28 billion of net customer outflows following the announcement of the lawsuits, and the company's share price closed more than 12% down. The US Securities and Exchange Commission was established as a result of the Securities Act of 1933 that was introduced by President Roosevelt to protect investors and maintain fair, orderly and efficient markets. The Securities Act itself has two basic objectives. It requires that investors receive financial and other significant information concerning securities being offered for public sale, and prohibits deceit, misrepresentations, and other fraud in the sale of securities. And one of the key issues surrounding the cases against both Binance and Coinbase is the definition of securities. Securities, as opposed to other assets such as commodities, are strictly regulated and require detailed disclosures to inform investors of potential risks. A security is a financial asset that can be sold or traded in a financial market. The term securities refers to investments that can be exchanged and used to raise capital. The most common types of securities are stocks, bonds, exchange-traded funds, options, and mutual funds. However, the rapid adoption of blockchain technology, cryptocurrency, and NFTs has led to many legal grey areas when it comes to securities regulation. In the United States, securities trading is regulated and monitored by the SEC to protect investors. Transactions that are considered investment contracts, such as trading stocks or shares in a company, must adhere to regulations outlined in the Securities Act of 1933 and the Securities Exchange Act of 1934, otherwise the company could be target of SEC litigation. SEC Chair Gary Gensler has long said that crypto tokens constitute securities and has steadily asserted its authority over the crypto markets, focusing initially on the sale of tokens and interest-bearing crypto products. While there are a few cryptocurrencies that are licensed as alternative system trading systems, a type of trading platform used by brokers to trade listed securities, no crypto platform operates as a full-blown stock exchange. The whole business model is built on a non-compliance with US securities laws, and we're asking them to come into compliance, Gensler said in a recent interview. However, crypto companies such as Binance and Coinbase refute that tokens meet the definition of a security and say that the SEC's rules are ambiguous and that the SEC is overstepping its authority in trying to regulate them. And Kristen Smith, the chief executive of the Blockchain Association Trade Group, has rejected the SEC's efforts to oversee the industry, stating, "We are confident the courts will prove Chair Gensler wrong in due time." In addition to the lawsuits, the SEC has also filed a motion to freeze the assets belonging to Binance's US affiliate. Whilst we're on the topic of cryptocurrency, I thought it'd be worth looking at what's happening with the price of Bitcoin. This chart shows the movement in the price of Bitcoin dating back to 2015. And if we focus in on what's been happening over the past 3 years, you can see that 3 years ago, in June 2020, one Bitcoin was trading for around $9,600. Now, 2021 was the golden age of cryptocurrency. That was the time when everybody was talking about Bitcoin achieving a valuation of $100,000. And in April that year, one Bitcoin was trading for around $61,500. We then saw the value crashing back down to around $31,000 by July. However, by November 2021, the price was back up to around $65,000, a price that has not been seen since. By January 2022, the price had fallen to $37,000. There was a brief recovery in March and April when the price bounced back to around $46,000. However, 2022 was a very bad year for cryptocurrency, and by the end of December 2022, one Bitcoin was trading for around $17,000, wiping out all of the growth that had been seen in the previous 2 years. However, as you can see from this graph, in the first half of 2023, Bitcoin has performed strongly and hit a high of over $30,000 in the middle of April. The initial reaction to the news of the SEC lawsuits against Binance and Coinbase was that the price fell to around $25,000, and it'll be interesting to see over the course of the next few weeks what happens to the price of Bitcoin. So what's the summary and conclusion today? Well, I wanted to post this video because the world of cryptocurrency remains a hot topic in financial markets. After the incredible gains in value seen during 2021, 2022 was a disastrous year for crypto, and that year culminated in the failure of one of the highest profile cryptocurrency exchanges, FTX, when Sam Bankman-Fried was arrested and charged with fraud. Now, since the failure of FTX, there have been a lot of questions raised about Binance, Coinbase, and the other crypto exchanges, because this market, despite being absolutely enormous and representing billions of dollars of trade per day, remains unregulated. And that does not sit well with the SEC and other regulators around the world, because their goal and their job is to protect the interests of investors. And the fact that they don't have any jurisdiction, they can't impose any rules and regulations over the crypto exchanges, means that any investors who are trading on those exchanges are completely unprotected. Now, as we discussed earlier in the video, Binance have structured their business to try to avoid regulation. However, the SEC has now filed 13 charges against the business. Coinbase is the largest cryptocurrency exchange in the USA and has also been hit with a raft of charges. And the reason that the SEC has taken both of these businesses to court is that it wants to prove its jurisdiction. It wants a court ruling to prove that cryptocurrencies are securities and therefore come under the definition of the Securities Act and therefore under the control of the SEC in the USA. So these court cases are going to be landmark cases. If the SEC wins, it's highly likely that it will be looking to exert full control over all of the cryptocurrency exchanges that are available to US investors. Now, Binance and Coinbase are both rejecting these charges, and they're saying that the SEC rules are ambiguous, they're not clear, and therefore they're not sure that cryptocurrency actually falls under the definition of a security, and therefore they don't need to comply to any of the SEC's rules and regulations. So the outcome of these cases is going to be very interesting and will be really important to the future of the cryptocurrency markets. If the SEC wins, we will see full regulation being brought in the USA at some point in the future, and that's likely to involve a lot of investigations. The fallout of the FTX failure was that investors lost billions of dollars, and the SEC wants to make sure that that doesn't happen again by regulating the cryptocurrency markets. And if regulation happens in the USA, it's highly likely that it will be adopted in other countries. So this court case is an absolutely pivotal moment in terms of the future of the cryptocurrency markets. Now, in terms of what's likely to happen over the course of the next 3 months, well, these charges have now been filed and court cases are pending. And whilst it's impossible at this stage to be able to predict what the outcome of those cases will be, I think the likeliest outcome for the crypto markets is that regulation is coming. We will see some form of regulation introduced in the USA and other markets at some point in the future. And it'll be really fascinating to see whether or not these charges against Binance and Coinbase are upheld, because if they are, it will have a detrimental impact on both of those businesses, but also on the wider cryptocurrency markets. So I'll keep you posted on any further news and developments as and when they happen. Hopefully you found today's episode useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.